Hello all. Today we'll be discussing about the fiscal policy. So, fiscal policy refers to the use of government spending and taxation to influence the economy, right? So, government use fiscal policy to control economic growth, reduce unemployment, and manage inflation. So, in this class, we'll be discussing about the government budget, reasons for spending and taxation, type of taxation, and expansionary and contractionary fiscal policies. Okay. Let's start with the budget. So, what is a budget? Budget is a financial plan of the government. It shows the expected revenues and expenditure for a specific period, right? So, the government's master financial plan detailing the projected balance between expected revenue and expected expenditure is called a budget. So revenue is mainly from taxes, and while expenditure include spending on public services such as education, healthcare, transport, and defense. So a proper budget help the government manage the economy effectively, right? So this is the expected revenue and this is the expected expenditure. So it can be either balanced or deficit or surplus budget based on the revenue and the expenditure. So every government is trying to balance their budget plans with the revenue. Okay. So let's see the reasons for government spending. Why government has to spend a lot on public spending like of the country, right? So the government spends more money for several important reasons. First thing, it provides goods and services that private firms may not supply adequately. Okay, so providing public and merit goods ensure the access to essential services under provided by the private market. Okay. Secondly, the government spending improves the supply side of the economy through subsidies and infrastructure development. This spending helps increase productivity, create jobs, and support economic growth. Right? So improve infrastructure like build the physical foundation necessary for commerce and society, including roads, buildings, electricity, etc. And also it will support the economic growth, like inject capital to stimulate activity and the expansion. So when the government introduce many projects or new construction works, etc., many people will be getting employed. The unemployment will be bring down, and it will improve the money injection in the economy. So these are the sides of government spending. This is why we need more government spending. Clear? Now let's see the reasons for tax. Why we need tax or why the government is stressing on taxation. First thing, it finances the public services. So we have already mentioned that the the major share of government revenue is from taxation, right? Taxation. So if the taxation is more, it will increase the revenue of the government. That is the first thing. So then only if the government has more revenue, then only they can provide or finance the public services, right? Including roads, education like public schools, etc., uh, government hospitals, all these services. Secondly, it will reduce harmful activities. So you might have noticed that the price or the tax for cigarettes or alcohol, right? All these are uh, more than the necessary goods, right? So this will reduce the harmful activities due to the high price. So when the tax is increasing, it will increase the price, right? So these product will be costlier. So some of the people may will have to reduce their usage or completely avoid the product. Then it will control imports. So we have a lot of import duties, right? So tax on the imported product. So when the tax increases, as we mentioned earlier, when the tax increases, it will increase the price of the product, which makes more people that cannot afford the product, right? So as a result, what will happen? People will reduce buying the product. So we can support the domestic people, right? So that is why we need control on import. Then redistribute income. So we know that in every country, the majority of their income will be in less number of people, right? For example, if you take the case of India, it is estimated that around 90 percentage of income is under the hands of 10 percentage of people. Okay, and the rest is shared by the remaining population. So, the taxation will redistribute the income through social welfare, pensions, and other welfare activities like elderly support, all these schemes and all. Okay. Then we have achieve macroeconomic goals. To achieve macroeconomic goal, we need better taxation. So basically, government collect tax to finance public expenditure such as schools, hospitals, roads, and infrastructure. So taxes are also used to discourage harmful activities. For example, imposing higher taxes on cigarettes or alcohol. Then import taxes or tariffs reduce excessive import and protect domestic industries. And taxation also help redistribute income from the rich to poor and support broader macroeconomic objectives like economic stability. Okay. So what are the principles of taxation or how can we make a taxation effective? So a good tax system should be following certain principle. First thing, it should be equitable, which means it should be fair for all citizens. That is what we mean by equitable. It is not meaning that it's not mentioning that it should be equal, but it should be equitable, which means it should be fair to all citizens. And it should also be economical. Why? So that the cost of collection is low. So if the cost of collection is more than the amount collected, it will be a loss to the government, right? So it should be economical. So the cost of the collection is low. Then it should be transparent. So transparency is important so people clearly understand how much tax they pay. Okay. And finally, taxation should be convenient. So making it easy for the people to pay taxes on time. Otherwise, they will feel much reluctance to pay the tax because it is very difficult to understand, very difficult to do the payment. So most of them might skip it. So it should be convenient as well. Okay. Now let's see the type of taxations. What are the type of income taxation models and the allocation of burden? Okay. So there are different type of taxation. First one is progressive tax. So a progressive tax increases as income rises. So if you are earning like up to 12 lakh, you only have to pay around like around 5% or 6% slab. If you earn more than that, your tax slab will be different. So there will be different tax slabs. And those who earns below a certain income will not have to pay the tax. So it will be revised every year in the budget process. Okay. So in progressive tax, the tax rate increases as income increases. That is used in majority of the economy. Then we have regressive tax. What is regressive tax? A regressive tax takes a larger percentage from low income earners, right? Because low income groups pay a higher proportion of income. That is what we mention as regressive tax. We can mention the example like taxes like VAT. Okay. So more common people will be, poor people will be affected. Then what is the proportional tax? Same exact tax rate for everyone. So no matter whether you earn in crores or in thousands, you will have to pay the exact same amount. Okay. So that is what we know call as proportional tax. And we have like direct and indirect taxes. Okay, that is the main classification. Direct taxes are paid directly to the government. Okay, the direct tax. So the tax is two type. First one is direct and second one is indirect. Okay. So direct tax like wealth tax, income tax, all these are considered as direct tax. And what are indirect taxes? GST, VAT, all these things are indirect taxes. Okay. So let's see the direct versus indirect. Okay. So as you can see, direct tax, it is paid by both citizens and firm, paid directly by individuals or firm to the state. Okay. Then second one, indirect tax. So it is embedded in transaction. We may not recognize it. Okay. It is, for example, it is added to the price of goods and services. For example, whenever you are buying something or whenever you are dining out or purchasing a vehicle or any goods and services, it is included there. Okay. So there you can see now it is called GST. There is state GST, central GST, etc. So you can see that it is embedded in the transactions. Okay. So these are the major types. Now let's see the fiscal policy. What is fiscal policy? So fiscal policy is the use of taxation and government spending to influence the aggregate demand in the economy. So aggregate demand refers to the total demand for goods and services, right? So by changing spending and taxes, government can stimulate economic growth, reduce unemployment, or control inflation. So that is why it is important. So fiscal policy is coordinated use of government spending and taxation to influence aggregate demand in the economy. For example, if you take that, just imagine this is the initial equilibrium. Okay, supply and demand, this is the initial equilibrium. So as a result, what will happen if the government is spending more? Okay, so government spending is more and taxation is less, which means people will now have more disposable income in their hands, right? So what will happen? They will purchase more. Their in demand curve will shift left. So the prices will high, people will consume more quantity, so the economy will grow towards growth. Okay, so mostly government will introduce more relaxed fiscal policies during the time of recession, so the economy can come out from this poverty and the other issues. And at the same time, when there is inflation or when the economy is like at the top of the boom situation, the prices will be very high. People like the value of money will be decreasing, right? So at that time, government, what will the government do? They will reduce spending and they will increase taxation, which means there will be less amount in the people's hands. They will only have less amount. As a result, the demand curve will shift left. Okay. So this is how they will manage it. So if it is in the high position, it will get back to the original. And if it is in normal, it will be reducing the demand. Okay, so basically this is how the government controls the market. So we call it as fiscal policy and they are operated by government spending and the taxation. Now let's see the expansionary versus contractionary fiscal policy in detail. We'll start with expansionary fiscal policy. So as we discussed earlier, in expansionary fiscal policy, the government will be taking this policy when the economy is facing some sort of downturn or in recession. So they will increase their spending and reduce the taxes just to increase the disposable income in people's hand. Okay, so just to increase the money flow. So how will the government increase their spending? Through introducing new works, right? Like retarring or construction of a road or bridge, something like that. So as a result, what will happen? The people, those who are working in the bottom level will be employed. So the unemployment will gradually decrease and it will increase the demand, right? As we have seen before, it will shift the demand curve to right. So as a result, the economy will slowly improve. So what is their aim? To raise employment and stimulate economic growth. So slowly the economy will grow. And at the same time, government also take contractionary fiscal policy. Whenever there is more inflation or something like that, they will be taking contractionary fiscal policy, which means spending will be cut down and the taxes will be raised. Okay. As a result, it will drain the excess demand and control inflation. So what will happen? The demand will curve will shift left and the economy will gradually become normal. So basically, expansionary fiscal policy used during periods of recession or slow economic growth. The government increases spending and reduces taxes to boost aggregate demand. So why they are doing this? To boost aggregate demand. As demand rises, business produce more goods and services, leading to higher employment and increase the output. So this policy help economic activity and reduce unemployment. Right. On the other hand, the contractionary fiscal policy is used when inflation becomes too high. The government reduces spending and increases taxation to decrease aggregate demand. So why they are doing this? To reduce aggregate demand. Right. So lower demand reduces excessive spending in the economy and helps to stabilize prices. So this policy is important for controlling inflation and maintaining economic stability. Got it?